What's up guys, welcome back to my YouTube channel. It's Amos. In this video I'm going to show you guys 5 trades you could have caught last week to scalp 1-to-1 risk to reward base hits with prop firms. You guys already know that the best way to trade prop firm is to have a low risk to reward, so you guys have a high win rate and a low risk of ruin. If you're trading blindly and you're gambling every single day and you don't have any trust in your system, listen to this video because this is pure gold. Let's get right into it. The first trade you could have caught was on August 12th, 2025, and as you guys can see right here, we're on the 15-minute chart on NQ, and this is the time frame that I use to find my bias. What do I use to find my bias? I use fair value gaps and liquidity. Inside this leg right here, I can see that we created multiple 15-minute fair value gaps, which is signaling that the buyers are really strong and we could potentially see price moving higher once we fill those 15-minute gaps. Perfect. Now I will mark out those zones and I will wait for price to tap those zones in order to have a potential reversal play using an inversion fair value gap. So now I will scale down to the 3-minute chart and I will wait for price to tap one of these levels. And as you guys can see right here, we tapped this 15-minute bullish fair value gap, which should act as support if we are truly bullish. Now we created this bearish fair value gap on the 3-minute chart, which signals that the sellers are really aggressive on the way down to a bullish POI. So now there will be blood in the market. Sellers are trying to push price down right here, but buyers on the higher time frame are ready to defend their position in order to create a new high. Now your job is to wait for this fair value gap to get disrespected so you can have a nice play for a 1-to-1 risk to reward back to the most recent high. So let's see here. This is exactly where you disrespect this fair value gap. So if you were truly bearish, you should have respected this zone in order to create a new low. But now since you respected this bullish 15-minute fair value gap, you know that the buyers absorb those sellers inside this support level. And then once you disrespect this bearish fair value gap, you have the confirmation that they're being squeezed and the buyers are strong enough to bring price back all the way to the most recent high. As soon as you disrespect this fair value gap right here, this is where you would go long, stop loss right below this candle's low, and you would target the most recent high for a 1-to-1 risk to reward right here. Let's take a look at what's going to happen. And as you guys can see, in few minutes, we hit our target. If I can recap this trade again, as you guys can see, we swept a sell side liquidity level, which told me that we were bullish. Then we tapped into a 15-minute bullish fair value gap, which signaled that if we are truly bullish, we should respect this level and use it as support in order to create a new high. I'm bouncing from a level that in the past buyers were really strong, so next time it pulls back to this level, it should hold in order to create a new high if we see signs of absorption. Then the third confirmation is that we saw aggressive sellers entering into this bullish zone. If you see aggressive sellers entering into a bullish zone, this is a really good confirmation because you know there's going to be blood in the market. There is going to be a transaction where some buyers will squeeze those sellers and those sellers will get squeezed. So this is exactly where you would want to enter the market because this is when you're going to have sharp moves. So here you respected this bullish fair value gap, you swept sell side, you inversed this bearish fair value gap where those lower time frame sellers were located, and then you scalped your way back up towards the most recent high. Right after taking this trade, I can see that we have a potential buy opportunity again because we created a 15-minute bullish fair value gap. What is this fair value gap telling me? It's telling me that there's a lot of higher time frame buyers right here that are willing to defend their position once we see price moving back towards this gap. So now what will I wait for? I will wait for price to enter this fair value gap aggressively by creating a bearish fair value gap on the way down, and then I will wait for price to squeeze those sellers, and then I will bring price back to the most recent high. So then right here, I scale down to the 1-minute chart, and as you guys can see, we have a nice power of 3 that is potentially going to happen. As you guys can see, we have accumulation right here. If we manipulate towards this 15-minute fair value gap and then we create an inverse, you could be early in a potential power of 3 because it will be accumulation, manipulation, and then distribution right here. So now let's wait for price to hit this 15-minute fair value gap and see the reaction. As you guys can see, we tapped this 15-minute bullish fair value gap, which is an area where you expect buyers to defend their position in order to create a new high. Now what happened? You created a bearish fair value gap, which is exactly what you want to see. You want to see signs of aggression from opposite participants because you know there's going to be blood in the market. Now what is your job? It is to wait for this bearish for value gap to get disrespected, so you know there's enough buyers right here willing to defend their position, so you have a lot of chances of seeing the most recent high get taken out. So let's say in this case, you would wait for this for value gap to get disrespected, and this is exactly where you would go along and your stop loss right below the most recent low right here. So you buy here, stop loss right below this low, and your take profit just above for a 1-to-1 risk to reward. Let's take a look at what's going to happen. As you guys can see, in a few minutes you hit your target. So if I have to recap this trade again, 15-minute fair value gap reaction right here. As you guys can see, we swept sell side, we tapped into a 15-minute bullish fair value gap, we inversed a 1-minute bearish fair value gap, and then we targeted buy side liquidity for a 1-to-1 risk to reward ratio. Right after taking the second trade, we have yet another opportunity because buyers are so strong that we're creating 15-minute bullish fair value gaps. So as you guys can see right here, we have a 15-minute bullish fair value gap right here. And what is this telling me? It's telling me that there's so many buyers inside the zone that are willing to defend their position. So we would expect that if sellers are getting squeezed when they're entering inside this 15-minute bullish zone, then you should see the most recent high and you should see a break of structure to the upside. Now that I can mark out this 15-minute zone, I will wait for price to tap this level and see if there's any signs of weakness from those sellers. Now I will go down to this 2-minute chart and I will wait for price to tap this level right here. As you guys can see, when we tap this 15-minute fair value gap, we create a bearish 2-minute fair value gap on the way down. What does that tell me? It's telling me that there's a lot of aggressive sellers entering an area where buyers should defend their position. Now I know there's going to be blood in the market. I know I could eat from this potential scenario because one of these participants is going to get squeezed, and this is going to be a good opportunity to go with the higher time frame trend. Right here, this is where my sellers are located and this is where my buyers are located. Now, what is my job? It is to wait for a squeeze to happen. I want to see this bearish fair value gap get disrespected. I want to see a bullish candle closure above this bearish fair value gap so I could bring price back up to the most recent high and for a 1-to-1 risk to reward. Now, let's see what's happening right here. We disrespect this bearish 2-minute fair value gap in one candle. Okay, V signature, perfect entry right here. So this is where you would want to go long, stop loss right below this candle's low, and you would target the most recent high for a 1-to-1 risk to reward right here, stop loss right below this level, and take profit just right here. As you guys can see, in a few minutes we hit our target. So right here we had 3 potential trades on the same exact day. Okay, we had this first long opportunity off of that 3-minute inverse, off of this 15-minute fair value gap bounce and that sell side liquidity sweep. Again here, 1-minute inverse into this 15-minute bullish fair value gap, and then right here again, this 2-minute inverse off of this 15-minute bullish fair value gap bounce. So you guys can see that 15-minute fair value gaps are really strong and they're a good indicator of who's actually in control and what area should act as support and resistance. Okay, it's not just highs and lows that could act as support and resistance. Fair value gaps actually can also. I know we just took 3 trades together on the same day, but we're not done yet. There's still a 4th opportunity because buyers are so strong that we keep creating 15-minute bullish fair value gaps on the way up. So let's see right here. We are creating bullish fair value gaps on the higher time frame, which is telling me that the buyers are strong, and if we pull back towards those gaps, we could create new highs. Okay, so I know those zones could act as support in order to create a new high. Now I will go down to this 2-minute chart again and see what is going to happen when we tap into this level. As you guys can see, we have also created a short-term low, which will act as sell side liquidity. And if we can sweep the sell side, create a bearish fair value gap from the leg that created the sweep into this higher time frame zone, that should hold in order to create a new high. And then we squeeze those sellers right here. This is my play to take a long play back to the upside. Okay, so this is what I'm going to wait for. I'm going to wait for this fair value gap, this 15-minute fair value gap to get tapped into. As you guys can see right here, we tap into this 15-minute bullish fair value gap. Now, what do I want to see? I want to see if there is possible blood in the market. I want to see aggressive participants in the opposite direction of my higher time frame draw. Perfect. I have this 15-minute fair value gap. I know that buyers on the higher time frame are dominating the market, and if we can find signs of weakness right here, we could see this high get broken. Perfect. Now, what do I want to see? I want to see aggressive selling into this zone that could act as support. This zone right here is a 2-minute bearish fair value gap, and a fair value gap is signs of aggressive participants in the market. Aggressive sellers were the one initiating that move into this higher time frame bullish zone, and if we are truly bearish, we should respect this fair value gap where aggressive sellers are in order to create a new low. But here, if we're bullish, we will disrespect the area where those sellers are located, and this will signal that they're being squeezed on those lower time frames and that the higher time frame buyers were strong enough and they absorbed them. Perfect. Now I will wait for this fair value gap to get disrespected. This is exactly where I get it. Stop loss right below this candle's low and take profit at a 1-to-1 risk to reward. Of course, you guys can increase the risk to reward and understand a little bit more about the strategy, but for this video I will keep a 1-to-1 risk to reward because I truly think this is the best risk to reward to have while trading prop firms in order for you to have a high win rate and a low risk of ruin. So let's take a look at what's going to happen. As you guys can see, in a few minutes we hit our target. Sell side liquidity sweep, we're bullish. We tapped into a 15-minute bullish fair value gap, we're bullish. We disrespected a bearish 2-minute fair value gap, we're bullish. And we have resting buy side liquidity above us, we're bullish again. Okay, a lot of confluences to take a scalp, but on this day we had 4 possible opportunity to scalp 1-to-1 risk to reward base hits with one simple strategy. The 5th trade you could have caught this week was on Thursday, August 14th. So as you guys can see right here, looking at this 15-minute chart, I want to look at 15-minute bullish and bearish fair value gaps to look for potential bounces and reversal plays. Perfect. If I take a look at my left right here, I have a small 15-minute bearish fair value gap. What is this telling me? It's telling me that this could potentially act as resistance if we find signs of weakness right here. I drag this small box to the right, and I have this zone as a potential reversal area if we could enter aggressively inside the zone. I have this zone as being a zone where a lot of aggressive sellers were located the last time we traded there. So next time we trade here, they could potentially defend their position in order to create new lows in the market. Once you understand that, we want to see aggression from those buyers while entering a higher time frame zone where sellers could potentially defend their position to create a new low. This right here, okay, this transaction could potentially create blood in the market and one of those participants to get squeezed. This is exactly where you would want to take trades and take quick scalps because there are explosive moves in the market. Good. Now, when you're going to enter into this 15-minute bearish fair value gap, you want to take a look at if we created a bullish 1, 2, 3, or 5-minute fair value gap while tapping this higher time frame bearish zone. And if you are truly bullish, you should respect this fair value gap in order to create a new high. But if you're bearish, you will disrespect it, which is your play to go short back to the downside. Okay, this is what you're looking for. Now, I will go on the 3-minute chart and take a look at what's going to happen when we're going to enter into this zone. You guys see, we tapped into this level to the tick. This is not random. 15-minute gaps are super strong and super good areas for support and resistance. We tapped into this level to the tick, cannot even close a single handle above, which makes it, in my opinion, a plus. And then we created what? A bullish fair value gap while entering a higher time frame bearish zone. This is exactly where exactly what you want to see in order to take a trade, because you know there's going to be blood in the market. Now, what is your job? It is to tell yourself that if we're truly bullish, you should respect this fair value gap in order to create a new high. But if we're bearish, you will disrespect this, and this is your signal to go short for the 1-to-1 back to the downside. Exactly here, this is where you disrespect this bullish fair value gap. You want to go short, stop loss right above this candle's high. Take profit at a 1-to-1 risk to reward ratio back to the downside. Let's take a look at what's going to happen. And right here, as you guys can see, we hit our target in around 9 minutes. Okay, the most important thing to understand here is gaps are areas where you could bounce from. They're areas where the last time we traded there on the higher time frame, those participants that created the gap we're the one controlling the market. So once we pull back to this area, they will most likely be interested in that price because it's either discounted or at premium. Okay, that's basically the principle behind this trading system. Now, you want to wait for signs of aggression from any of those participants and signs of weakness from any of those participants to take a trade, because when there's blood in the market, this is when there's really good trades to take. Now, let's take a look at the next day, which is on August 15th. As you guys can see right here, I'm on the new day, and right here, we are creating bearish fair value gaps on the way down. What does that tell me? It's telling me that sellers are the one controlling the market. You guys can see we created a bearish fair value gap right here. We held it, and then we go down again, and we create bearish fair value gaps on the way down again. So now I know that I can mark out this 15-minute bearish fair value gap as being a zone where those sellers could potentially step back in to defend their position in order to see price go back down to create new lows. Perfect. Now I will wait for price to enter aggressively inside the zone by creating a 1, 2, 3, or 5-minute fair value gap, bullish fair value gap, that signals that there's a lot of buyers interested in price, in a price basically that also the sellers on the higher time frame are interested. Good. Now that you know there's going to be blood in the market, you will want to wait for those buyers to get squeezed, and then you will go short for the most recent low and for a 1-to-1 risk to reward. So now I will go on the 1-minute chart, and I will wait for price to tap this level. Perfect. We tap this level right here. Now what is happening? We are creating a 1-minute fair value gap right here, but I will go on higher time frames than that just to make sure if the structure is as good looking as that. Okay, so right here I will take the 3-minute because the 3-minute is the highest time frame of the 1, 2, 3, and right here, as you guys can see, we created a 3-minute bullish fair value gap on the way to a 15-minute bearish zone. Okay, on the higher time frame, sellers are located right here. So if we are truly bearish, okay, we will disrespect this 3-minute bullish fair value gap and we will go down to the most recent low. Okay, if we're truly bullish though, we will respect this level right here to create a new high. But what do you think is going to happen? The play that most people do, and the reason why most ICT traders can't find the right bias, is because they try to go long or short at any time in the market just because of pure market structure. But let's say in this case, why would you want to go long here, knowing that this play right here is basically a prediction play that these buyers will hold in order to create a new high. Okay, I don't want to predict that those buyers will hold in order to create a new high, and I also don't want to predict that this 15-minute fair value gap is going to hold in order to create a new low. This is way too subjective. You never know when those fair value gaps will hold or will get disrespected. What you want to do is react to the market. You don't want to predict, you want to react. So what's the reaction play here? You will want to react to those buyers being squeezed by an inversion fair value gap being created in the market. Thank you guys so much for listening to this video. If you want to start using prop firms, make sure to check out Tradify. They're by far the best prop firm in the game. Use code AMAS for the highest discounts. If you want to see me live trade, make sure you tune in every single Thursday and Friday at 1 p.m. EST. I live trade and show you guys my exact execution on YouTube. I appreciate you guys so much, and I see you guys on the next one. Peace out.